Every buyer I sit down with in Vegas sees two numbers on their loan estimate, an interest rate and an APR. And almost none of them know why those two numbers are different. Lenders aren't always great at explaining it, and that gap in knowledge can cost you real money. So today I'm breaking it down in a plain English, no finance degree required. Real quick, if you're shopping for a home in Vegas or planning to make a move in the next 6 to 12 months, drop a comment below and let me know where you're coming from. I also do free buyer consults, so the link is in the description, and if this kind of no fluff, no frills content is useful to you, hit subscribe. I put out new videos on Las Vegas markets every week. Now, all right, let's get into it. Let's start with the interest rate because that one is simpler. Your interest rate is the cost of borrowing money, period. It's what the lender charges you to use their funds, expressed as a percentage of your loan amount. If you're taking out a $600,000 mortgage at a 7% interest rate, that rate is what drives your monthly principal and interest payment, or your P&I. It's the number your lender uses to calculate how much you owe them every single month. Simple, clean, it's one thing. Now here's where buyers get tripped up. The APR, the annual percentage rate, is not the same thing. The APR is the interest rate plus most of the fees and costs you're paying to get the loan. And we're talking origination fees, mortgage broker fees, discount points, and mortgage insurance if that applies. Federal law, specifically the Truth in Lending Act, requires every lender to disclose the APR. The reason that law exists is so you can compare loans on an even playing field. Here's why that matters in practice. Let's say lender A is offering you a 6.75% interest rate. Lender B is offering you a 6.875%. On the surface, lender A looks cheaper, but when you look at the APR, lender A is at 7.1% and lender B is at 6.95%. So what does that tell you? Lender A is charging you significantly more in fees, and the lower rate is real, but you're paying for it up front. Lender B's loan actually costs you less over time, and that's exactly what APR is designed to surface. The reason APR is almost always higher than the interest rate is because those fees are being spread across the entire life of the loan, typically over 30 years. So when you fold in origination cost points and other charges and distribute them over 360 payments, it raises the effective annual cost above the base rate. Now, there's one important caveat I want to give you. The APR calculation assumes you're holding that loan for its full term. If you're planning to sell or refi within 5 to 7 years, the APR becomes a less useful comparison tool. In that scenario, you'd want to look more closely at the interest rate itself and the out-of-pocket closing costs as separate line items. Because if you're not in the loan long enough for the math to average out, you're not getting the full benefit of paying higher fees for a lower rate. The other thing to know is that APR doesn't include everything. Title insurance, appraisal fees, attorney fees, those typically aren't part of the APR calculation. So two loans can show the same APR and still have meaningfully different total closing costs. That's why I always tell my buyers, look at the full loan estimate, not just the headline numbers. So here is the practical way to use both numbers when you're comparing lenders. Use the interest rate to understand your monthly payment, and then use the APR to compare the true cost of one loan offer against the other. Then pull up the full loan estimate. Page 1 shows your interest rate, page 3 shows your APR under the comparison section, and then go line by line on what each lender is charging. That's where the real difference to show up. So the bottom line, the interest rate tells you what the payment is. The APR tells you what the loan actually costs. You need both numbers to make a smart decision. and any lender worth working with will be completely transparent about both. If you're buying in Las Vegas and you want someone who's going to explain every number on every document before you sign anything, that's exactly how I work with my clients. Link for a free consultation in the description. Drop any questions in the comments. I read every one of them, and I'll see you in the next video.